Hi, everyone. Thanks so much for joining us today on our Understanding the Vacant Home Tax in Ottawa webinar. If you don't know me, my name is Amy Friesen. I'm the founder and CEO of Tea and Toast. We work with clients who are in need of housing situations, specifically seniors, so either staying at home with care or retirement or long-term care, or really just trying to figure out what the plan is and get some help making a plan. Today, I'm joined by Curtis Murphy, who is also a wearer of all hats. He is the owner of Murphy Group and Downsized Ottawa, as well as a realtor. Curtis, I'm going to hand it over to you.
Awesome. Thanks, Amy. Super excited to be here today. Just a little bit about myself. I've been in property management and real estate, including operations, since 2007. More recently, I was a general manager in retirement home community, as well as the director of operations. Since then, I've created a company called Downsized Ottawa in order to kind of merge my background in worlds, where we help seniors downsize from their current home, using services like Tea and Toast, which is amazing, helping them find the right property, and decluttering their home, selling their property, and allowing them to move into a retirement home nice and smooth. Yeah, super excited to be here today. Thank you. Okay, so understanding what this tax is all about. I think most people are aware, early 2023, everybody received a letter saying you have to opt in and declare if your property has been vacant in the past year. So what this is really about is the city went ahead and voted on this scenario after doing some research through some other vacant residency taxes in other countries and provinces. Their main objective here is to try and combat the affordable housing crisis in Ottawa. So they get to see how many units are vacant in order for them to open up those units and provide them to the people in the city that actually need them. But number two is they're also going to create some revenue in order to fund the affordable housing department in the city of Ottawa. So they're projecting to make well over $1 million a year in this tax that'll go, they're saying, directly to the affordable housing department. So key provisions, really at the end of the day, what's really important is to know that when you are filing your vacant residency tax, so it's going to ask you to declare what's happened in the previous year in your property. Now, what that means is they need to know if your unit or home has been vacant for any longer than 184 days, which essentially equivalent to 6 months. So they're going to use that portion of it in order to say, yep, you're going to be taxed. They're actually going to do it based on 1% of the assessed value of your property. That will be the tax that will be charged. So it's really important to note that the 1% is being charged on the assessed value of your home. It's not the current market value or real estate value of the property. It's the assessed value, and that assessed value is what the city uses, for your taxes. They actually go and take that amount, and that's how they base your taxes. And the 1% tax, the 1% that they're going to charge you for the vacant unit tax will be assessed on that. So the penalties are for the non-compliance. Now, the first year they actually waived a lot of the late fees. Now there will be a late fee if you don't file in time, and I believe that's going to be around the same time you should have your taxes paid for the city, which is around the March-April deadline. So they didn't necessarily come out and say what that fee will be like. It corresponds with the same late fees that has anything to do with the city of Ottawa. Now, if you dig deeper into it, there is a pretty substantial fee that if you do not pay this vacant residency tax, it could be a minimum $500 or not more than $10,000. And they have the discretion to do that depending on the property. Okay, so possible impacts. So really the big thing is when it comes to the homeowners, including seniors, on what that impacts are people that have multiple properties. Mainly because this is only the main provision too is that this is only following procedure of units that are non-principal residences, right? So essentially investment properties, which is super important to focus on if it is a homeowner or senior. If it is your principal residence, you are exempt, right? You are exempt from this. So for the most part, the biggest chunk of the city, let's be honest, won't be paying this tax because they are living in their principal residences. So it will affect people that have multiple properties, and they have to file that return. So also when looking into this, the big part too is that if you do not file, the city will assume you were vacant. Okay, so number one is to make sure you do file. They will be sending a yearly reminder on that, and making sure that you do so. The easiest way to do it is through the web link that they provide, and you'll get a code to use that. And you can actually add this. There's the section on your back end of the city of Ottawa as well, where you pay your taxes and water bill and stuff. But make sure it's filed every year, and actually to clarify too, whether it's an investment or a principal residence, you still have to file. I'm not 100% sure why they're asking people to file for their principal residences when it's clearly exempt from this, other than the fact that I'm sure they're just wanting to gather more detail to see if they want to change this rule down the road. But very important that you do have to file. If for some reason as a senior, you are unable to use the internet properly, the city of Ottawa you're able to declare over the phone or even in person as well. So just to explore the solutions and workarounds, the biggest things are just understanding the exemptions. The biggest one obviously is your principal residence. And there's a few others that are important to note. One of them is pretty straightforward, is if there's a death involved in that ownership of the property, it is fully exempt from this vacant residency tax. Here's a big one too. If the property owner is in the hospital or a long-term care or retirement home, if they are in that home and outside of their principal residence, you are exempt. So very important to go through that. It's also exempt from they call it the arm's length of a sale of the property. What that means is if the property was sold during that year that you're filing for, I believe when they say arm's length, it's like a month or two within that, where there could be a vacant possession or the property's left vacant before it sells. So that would be exempt. And then there's a couple obvious when it comes to if there's a court order for one reason or another that prohibits the sale of the property, that's a part of it as well. Or if you're undergoing an extended or a modification or renovation with construction, that is also exempt, which is probably a pretty big part of what you'll see out there. Or another one too, which could be as a senior that owns a cottage. If the property has been used as a cottage rental with a valid permit according to that, for a minimum of 100 days, it's also exempt. So those are some good things to go back on and understand. So they promised that they made the form and information very simple, but you could tell they use the legality of wording to make sure they cover their end, which is important for them. But all these little things are a part of it, and there's probably, once again, the biggest chunk of the city is not going to have to worry about it. But in the situation where you have an additional property, you have to make sure you are filing yearly. So this isn't going to stop. This is something they're going to do every year. And it's important to make sure you filed, because I'll say it again, if you don't, even if it's your principal, and you don't file, they're going to assume it, and you're going to get charged 1% on your assessed value. That's pretty much it. I know it was quick. There's a lot of points in there. If you go through their website, if you actually just Google the City of Ottawa and talk about the vacant unit tax, there's sections in there that you can really learn the details about, including the late fees and stuff like that. They get into further detail on that. But I'll say it again, the most important part of it is to make sure you do file and you do let the city know yearly if your property was vacant for at least 84 days or 6 months. That's it.
Awesome. Thanks very much, Curtis. Does anybody have any questions? Oh, there's a question pop right in. If you've got questions, pop them into the chat. Question here from Alice is there a time limit on the exemption for being in a retirement home or long-term care, i.e. if the owner is in a retirement home for a long time and it's taken a long time to deal with the property, is there a risk that the exemption will expire?
Sure. So my answer will start by saying I don't work for the City of Ottawa. But at the end of the day, what I've learned is no, that will not expire. So when I was going through this whole process and digging in for my clients too, there are vacant unit tax provisions in other countries and provinces that do have limits on that. But thankfully they made it very specific in one of the answers by saying they felt like they might take advantage of somebody in that situation who's obviously not in that home for a real reason. So at this time, from what I understand, there is no time frame on that person that is out of their home for a hospital or long-term care.
Okay, perfect. Marianne would like to know, why would people who are living at home but under care with a personal service worker, so a PSW, and family member have to pay vacant unit tax?
So they wouldn't. If they're living at home, they're exempt.
Right, so they can have, I mean, so people getting care and stuff in their own home has no bearing on
Nope.
this at all. It's just a matter of if they're in their own home, then they have to file to say it's not vacant, but they wouldn't be getting paid, or they wouldn't have to pay the tax.
Yeah, I mean, that's right. I would assume in this scenario, this person is living in their principal residence. And well, which makes sense. So they would be exempt. The only pain is they do have to file. And I mean, if it is your principal residence, it is very easy. It's just a few clicks online or a phone call to say, yeah, I live here, or, you know, somebody in the family to POA wise to make that assumption.
Marianne says they have a partial rental property and no funds to renovate the premise while waiting for access to long-term care.
Okay, so that means, and this, I guess let's clarify, are there two properties involved here? Sounds like it.
Yeah, Marianne, can you let us know? But they're it sounds like there's just another property because they can't renovate it. It's kind of just there right now and they're not dealing with it. We'll see what Marianne says.
And they're receiving care as if they're almost in the retirement home, right? That's kind of,
so it sounds like they're waiting for long-term care, receiving care in their home. So she says, oh, that's Julie. Julie will get to you in just 1 second. Marianne, there are 4 units and they occupy 2 and 2 are not in livable condition.
Yeah, I mean, I don't have the perfect answer on that one. I would assume you could battle that situation with the city a bit, because I'm like, if the seniors are receiving, or these people are receiving care and unable to fund or renovate these other 2 units, because the provision for this tax is actually, when you're in multi-residential units, is anything under 6 units, right? So if you have a larger property that's over 6 units, it's not a part of that, because of the percentages are more inclined to have some vacancy throughout the year. When you're in 4, yeah, I think that's something that you could definitely battle with the city on. I'm not 100% sure on that situation, because on paper, I would say yes, but I think because there's some care involved and lack of funding to fix the other options. That would be something to call the city on.
Julie's adding to this conversation, and she was just saying that Marianne's kind of speaking for their situation. Julie just said our situation doesn't fit in the categories, and we did pay the tax and wondering if it's worth going through the appeal process. My dad owns the house that we live in with 4 units. We are being charged for 2 vacant units. I live in one, my parents live in another. My dad has dementia, receiving care through the LIN, and it's on a waiting list.
Okay.
We went through the questionnaire with the city, and the city went ahead and charged with the vacant unit tax.
Well, yeah, no, this is why this seminar here, this podcast actually makes sense to create, right? Because I think I'd like to know the answer on that. Like I said earlier, on paper, it sounds like they'd have to pay, but the argument would be they would be in that long-term care facility if they could.
Yeah, well, that's the
Right.
thing, right? There's such a waiting list. People are kind of
Yeah.
stuck where they're at. I would say, like you said, Curtis, it's worth having maybe another talk with the city, but you know, that's tough. It's hard to get the right people, but
I'm going to assume that, yeah, sorry, Amy. I'm going to assume they're dealing with a lot of these unique situations, being this is the first year. But I would definitely call them. I have their number to call and talk. Like, there's a line set up directly for the vacant unit tax. But it's a city number, and you would ask for that at 613-580-2444.
Okay. David says, Curtis mentioned exemption for hospital or long-term care. Does the exemption extend to living in assisted living in a retirement home? My mother came out of the hospital in February, and her home is not fit up to deal with her disability, but she is not in long-term care. Rather, she had to move to a retirement home.
Yeah. So from what I've done, what I've seen in my research is, yes, it's long-term care home and retirement home. To me, they're receiving care. At the end of the day, they're not in their home for a reason, and that's for the better of their health. So yes, the city should assume them both as the same.
Yeah. Is there any other questions? Great questions, everyone. Good conversation to have. We'll just wait for a couple seconds, see if anybody else has any questions. As mentioned, I will send out an email when we're done so that you can have a copy of this webinar if you'd like to have a look at it again, or if you know someone that might need the information, feel free to share it around. Doesn't look like there's any other questions. So Curtis, thank you so much for joining us. Oh, David put in the chat for the phone number. I'll put that in the email as well, just so that everybody has it. Curtis, thanks for joining us. I really appreciate it. I think it's a really good conversation to have.
Yes, thanks so much, everybody.
All right, everyone. We will see you soon. Thanks so much for joining us. Have a great day.